Yesterday's map gave them two triggers, and Tuesday hit them both. Reclaiming 75.04 retires the bearish read. That was the line, and the S&P closed at 75.09, first settled back above the wall since it broke. The trade that did the lifting was memory chips. Micron gapped up 7% at the open and finished up 12, the loudest single name move on the board, and the other trigger printed on the other side of the tape. Brent settled at 91.63 through Monday's rejection high at 91.42, the level I said the bulls had to reclaim to prove the war premium is still growing. They reclaimed it in one session, so stocks called off the alarm on the same day oil raised it, and the 10-year closed a basis point under its July high while all of that happened. Somebody's read on this war is wrong. And tonight, I'll walk you through both sides of the argument, chart by chart, and leave you the numbers that settle it. Start with the index bar, because the shape matters as much as the close. The S&P opened at 74.90, still under the wall, worked through 75.04, printed 75.15 at the high, and settled at 75.09, up 0.9%. That snapped a 3-day losing streak. Now the honest size of the win, 5 points of daylight above the level on one close. Monday's tape got above this same line intraday, and sellers ran it back 70 points by the bell. Tuesday's buyers took it and kept it, and the difference between those sessions is the whole argument for the bounce. The bar I want next is the retest. Wold ceilings get respected from above or they get given back fast. And 75.04 is now the floor that grades every session this week. Below it, Tuesday's low at 74.68 is the deeper line. Lose both, and this close goes back in the failed bounce file next to Monday's. Here's what actually paid for the rally. The Motley Fool's market wrap has the roster. Micron surged 12%, SanDisk soared 14%, and AMD added 8%, extending its run on the artificial intelligence deal with Microsoft. The fuel was strong export data out of South Korea, the memory supply capital of the world, which the Fool reads as evidence that AI demand hasn't cooled. They're lying on the tape. Today's gains offer some reassurance that the recent pullback was more of a reset rather than a wider loss of confidence. The filings backed it up as well. Nvidia disclosed a 9.3% stake in Nebius, the AI cloud builder. It first backed with $2 billion last year. That's a balance sheet talking, and it says the biggest chip company on earth still wants more compute capacity, not less. And the same wrap flags tomorrow's results from Alphabet and Tesla as the next read on whether the spending holds. Hold that thought. It anchors the calendar at the end. Micron's daily bar is what conviction looks like. The stock closed Monday at 865 and change, opened Tuesday at 925, a 7% gap before the first trade, ran as high as 982.88 and settled at 970, up 12% on the day. A gap that holds all session means buyers never let the stock trade back into Monday's range. The level framework is clean. Monday's high sat at 901 and the gap cleared it at the open. That's the floor the bulls have to defend now, because a close back under 901 fills the gap and unwinds the whole statement. Above, today's high at 982 is the ceiling the next leg has to take. The mechanism matters more than the candle. Memory pricing is where AI demand shows up first. Chips get ordered before data centers get built. So when the memory names lead, the market is trading the supply chain's earliest signal. Now the other war story, the one the equity tape looked straight through, Reuters, carried on BNN Bloomberg, has Tuesday's record. American forces bombed targets in southern Iran overnight after the president said Tehran would pay dearly for the deaths of American soldiers, and Iran answered by striking American sites in Bahrain, Kuwait, and Jordan. In the strait itself, a tanker was hit by a projectile and its crew abandoned ship. Yemen's Houthis threatened a naval blockade of Saudi Arabia, and 2 Saudi tankers have already reversed course in the Red Sea. Mediators are floating a 10-day ceasefire. Nobody has taken it. PBS analyst Giovanni Stanovos read, quote, lower exports through the Strait of Hormuz and concerns of potential supply disruption from oil coming through the Red Sea are moderately supporting oil prices. A10, both routes contested, and the ceasefire is an offer on a table nobody is sitting at. Brent priced that record honestly. The bar opened at 88.95, ran to 91.99, held 87.87 at the low, and settled at 91.63. Up 3.2%, and through the 91.42 rejection high that capped Monday. Yahoo Finance flags it as oil's highest level since mid-June. Remember the sequence here. Monday tagged 91.42 and gave nearly all of it back. That was the premium stalling. Tuesday took the same level out and closed above it. The shelf structure moves up accordingly. 91.42 is now the first support. The old rejection working as the new floor. And today's high at 91.99 is the line that opens the June spike range if it goes, a premium that closes at its highest since mid-June, While a ceasefire offer sits ignored on the table, is a market telling you what it thinks of the offer. The producers signed off on it, which is the part I always check before trusting an oil move. XLE closed at 58.50, up about 1%, and printed 58.53 at the high. The old July ceiling at 58.39. Monday's rejection high was taken out and held into the bell. The staircase underneath is intact. 57.30 was the original breakout trigger from Friday's map. The fund has now closed above it 3 sessions running, and each ceiling it clears keeps turning into the next shelf. Crude, up 3% with the sector fund at July high closes, is a supply premium with money behind it. The barrels and the equity are pricing the same story. If they ever split, that split becomes the lead of the show. They haven't. The bond market split the difference between the stories. The 10-year yield rose 3 basis points and settled at 4.63 after running to 4.64 intraday, right into the July high. The line yesterday's map named as the trigger that reprices everything else. It got touched and it held, barely. Read the mechanism: crude at its highest since mid-June. Feeds energy inflation. Inflation keeps the Fed careful, and the discount rate on every long-duration asset creeps up. That channel is live. Yields pressed their ceiling on a day stocks rallied, which means money was not hiding in treasuries either. And here's the tension I can't resolve for you tonight. The most rate-sensitive index on the board led the market higher, while the 10-year sat on its July high. That divergence has to resolve. The Fed is silent until the decision on July 29th blackout. So between now and then, the resolution comes from the oil chart or the earnings tape, nowhere else. Look at the leader with that tension in mind. The NASDAQ 100 opened at 29,059, ran to 29,192, and settled at 29,155, up just under 2%. The strongest of the majors. The level work, 28,814. The July floor that turned into a lid last week flipped back under the index in one session. Tuesday's low at 28,891 never even tested it. That lid had held as resistance for 2 straight sessions, and clearing it is the tech tape's way of saying the pullback ran out of sellers. The ceiling above is Tuesday's high at 29,192, with the July high above that, but hold the divergence duration heavy tech rallying. 2% into a 10-year parked at its July high is the market betting that AI earnings power beats the rates map. Alphabet and Tesla report tomorrow night, and that bet gets marked to market immediately. The VIX closed at 1704, down nearly 9%, with the session low at 1686. Tuesday unwound nearly all of the risk premium. The options market spent Friday and Monday building. Friday's jump, Monday's standing price at 1866, most of it handed back in an afternoon. The frame, 1950, is the July top. Printed Friday, 1686 is Tuesday's low, with the July floor just under 15 beneath it. An options market at 17 with a tanker abandoned in Hormuz that morning is a market that has decided the war stays contained to shipping lanes and out of the earnings tape. Maybe it's right. It was right to look through the last escalation. But that's now a crowded, cheap insurance bet, and 1950 is the number that says it's unwinding. One more story from Tuesday, because it's the rule for the next 2 weeks of earnings. Danaher beat on both lines. $1.94 adjusted against $1.83 expected, $6.27 billion in revenue, up 5.5%, and the stock still tanked 14%, the worst decliner in the S&P, because the company cut its 2026 core growth outlook to 3 to 4% from 3 to 6, and guided the third quarter to just 2 to 3. Benzinga's earnings desk has the detail. Bioprocessing orders actually grew mid-teens, but the outlook came down anyway. Same session, other direction. 3M beat with $2.40 in adjusted earnings on $6.5 billion in revenue and raised its full-year guide to a range of $8.80 to $8.95, from $8.50 to $8.70. General Motors raised its full-year operating profit guide for the second time this year to $14 to $16 billion, while absorbing an assumed $2.5 to $3.5 billion in tariff costs. The pattern across the tape, the quarter you just printed, is table stakes. The guide is the product. Sellers paid 14% to teach that lesson once on Tuesday. Watch what the next thin guide costs. So here's the map with both triggers spent. The index side, base case, is that the breakout gets its retest. 7504 holds on a settled basis, and the S&P grades higher into the mega cap prints, with Tuesday's low at 7468 as the deeper floor. Give the level back on a settle, and the whole week reverts to Monday's squeeze between 7422 and 7504. The oil side, base case, keeps Brent shelved above 91.42 while the ceasefire offer hangs. Escalation is a settle through 91.99 that reopens the June spike range above. De-escalation has a named trigger for once. The 10-day ceasefire actually landing, and the confirmation is a settleback under 91.42, which starts refunding the wheat's premium. If that refund starts, XLE giving back 58.39 confirms it from the equity side. Rates arbitrate the whole board, same as yesterday. The 10-year clearing 4.64 on a settle confirms the inflation transmission and taxes every equity chart in this video, and holding under it keeps Tuesday's bet alive. The calendar does the rest. Alphabet and Tesla after Wednesday's close. The AI spending read that either feeds Micron's tape or starves it, and the Fed decision lands July 29th with no speeches in between. If you keep two numbers, keep 91.42 on Brent and 4.64 on the 10-year. The first says whether the war premium keeps building. The second says when it starts costing the stock market. The completed bars will answer, same as always, and I'll walk you through whichever answer prints. If a desk that tops in settled levels instead of headlines is useful to you, subscribe. One click and it keeps this thing daily. See you after the close.